Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate, not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
Let's go ahead and get started. So thank you for joining us for this wealth webinar. This is for advisors. And if you are on this video and you are not a wealth advisor, you're a sneak in, that's okay. You're welcome to listen in. We always want to gain as much knowledge as we can, and we want to have as much wisdom and experience gained from other people's experiences. I am DL Campbell. I have over 20 years of commercial real estate experience. I came out of the corporate world, 30 years as an engineer, can do accounting at a CPA level, but 20 years of commercial real estate experience. And all of that experience is leading these projects that we're doing in hot Dallas. We're right in the middle of the country. We're in the best economy that there is. And today's wealth webinar is on advisors, how to protect your investors, your clients from the blunders that are happening in the market. Now, some things we don't have any control of, right? Like the things that are going on with the government right now. The political environment, we can't change that. We can go ahead and ignore it and say, I'm going to make my investment. I'm going to do my due diligence. And if I'm comfortable with whatever project that is coming across their desk, then they will invest, especially accredited investors, right? So it is our honor to come to you today with a couple pieces of material as we go through this wealth webinar. One is a 400 years of experience with our construction, our engineers, our owners rep, our team, all of our consultants. We have over 400 years of experience in commercial real estate and construction experience. So you will want to get a hold of this brochure that is a due diligence question for your investors to be asking. Tough time in the market, but they still need to do their due diligence. It's on them. And we help advisors to know which questions to ask in the commercial real estate realm. Now, we are focused on the alternative asset of commercial real estate. That is our focus. And we know that there are other alternative assets to put in the portfolio, but also we know that after having traveled with advisors and registered investment advisors, broker-dealer, and family offices, we know that commercial real estate due diligence is key, and advisors want to put up to 30% of a person's portfolio into commercial real estate. Why? Well, it's half as risky as the stock market, and we know that. Also, it doesn't walk away. Commercial real estate doesn't walk away. It is there when you leave it, and it's there when you come back. So very, very solid reasons to be putting your investment and your clients' investments into commercial real estate. That's our specialty. 20 years from you. So that is one of the brochures you're going to want to ask for. And we have it in PDF. We can send it over to you. And then also our project, the Prestige at Mayhill, which we're permitted for, we are excited about that. We're pulling permits right now. A little bit of an update on our Prestige at Mayhill project. 350 Class A luxury multifamily units in the heart of Texas. Now, in the heart of Dallas, we are in the top market for wages in all of Texas. Dallas is the highest wages for professionals, and also in rents. Dallas is the highest rents in all of Texas. So excellent market. Number one in construction for multifamily. Number two in all kinds of construction in all of the nation. So let's go ahead and get started. We've got a quick presentation. I know you're taking your lunchtime now. Let me go ahead and share my screen. I've got a little bit of information to share with you. And how is the audio? Audio is good?
Yes, Teal. We can hear you loud and clear.
Thank you. Good, Jill. We're Honors Way Group. That's our umbrella organization for the Prestige at Mayhill, Corinth Living Condos, and other commercial investments that we are currently doing. Welcome to our wealth webinar for advisors, how to help your clients avoid the real estate pitfalls. Because besides the political environment and besides other things that we don't have control of, there are some things that we do have control of. And that is staying away from syndicators who are just trying to do a deal just to get that fee. We're owners of the property. We do this every day. That's why we're running a little bit late. Sorry, we're running a couple minutes late because we're working. We just don't go around giving seminars all the time. So we are excited to be able to give you this tough information, but helping your clients to do the due diligence that we know that you want them to do. I'm D.L. Campbell. I am vetted through Quest Trust, and I've trained people in their lunchtimes for Quest. We have presented many times at TNDDA DISA for the license to register investment advisors, broker dealers, and family offices. We have presented and had tables at other organizations, FactRight, Du Bois, a lot of different places where advisors are, and have traveled full time for the last couple of years talking and interacting with advisors. And what I found was the advisors are a little bit hesitant because they don't have the commercial real estate background most of the time. So they need to know how to do this commercial real estate due diligence as well. And we are there to help. We are happy to help. We've met with a lot of people, high net worth, ultra high net worth. We've raised capital on 506B, 506Cs. We've closed funds successfully, and we continue to move forward in the market as leaders in driving this market forward. And when the interest rates were too low, it was a hard time because we could see what the syndicators were doing. They were just buying up properties, even when the numbers really didn't make sense. And that was a hard time for me. So we just kept our head down. We focused on this property and we tripled the value of the property. So we bought it for $6 million. We put entitlements on it. And the story now it's worth almost $20 million. It's worth $20 million. And we are pulling permits right now. We are excited. We are very, very with the stamped city plan in, and everybody is running. So that, and then the Corinth living condo being put up as well. Very excited. So back to the syndicators, we want to watch out that do they spend time on the property? Do they even know what the investment is all about? Are they just getting the loan to get that fee and then they move on? Okay, so that's one of the ways that the advisors can help the clients in avoiding the pitfalls in commercial real estate. So this is actually a photo of the common area at our property in Austin, and that was 22 North 240 units, Class A luxury built on 11 acres, some tuck under garages, also to the same tenant type that we're working with, the professional tenant type. They always pay rent. And the nice thing about this is another way to help your clients not fall into the pitfalls of commercial real estate is, what is that demographic that they're serving, that the property is serving? What is the class of the property? So common to have syndicators be picking up C-class properties and then turning it into a B, calling it an A. But still, the rents don't go up. The rents are still compressed, where our rents have stayed consistent over the years. In 22 North during the pandemic, we saw rents when everybody else was having rent moratorium on their properties. When everybody else was having rent moratorium on their properties, then our clients, our tenants just paid rent. So we want that asset class with that tenant type where the tenants just pay rent. That's a way that you can help your clients avoid the pitfalls of commercial real estate. So we have, put this to the side. We have, I came out of the corporate world, but 20 years of commercial real estate. We have our partner, Kobe Hinai, who has flipped 1,500 townhomes and private money. He has apartments portfolio, a lot of experience in development. My partner, Mike Roscoe, who has over 25 years of commercial real estate experience and mortgage broker, also has a lot of experience in lending and development and redevelopment. So we're here to talk about how to help your clients avoid the real estate pitfalls. First of all, the heightened scrutiny of fiduciary standards and best interest obligations. So one of the things that I like about some of these summits and conferences that we go to for registered investment advisors and broker dealers is it does give us the recent updates from the SEC and how the attorneys are fighting with the SEC to make sure that regulations are fair and upright. It's a battle with the SEC. Now, we know that the SEC has two goals. One is to provide good deals. They do want to provide good deals, but the other one is to keep people safe in their investments. And we want to keep people safe in the investments too. That's why we're having a hard conversation today to make sure that we are talking about the important pieces of this pie where people don't lose money. You know, it's important and it's serious because we don't want people to lose money. On our properties right now on the Prestige at Mayhill, there's $12 million of equity to attach to. So an investor who is accredited is going to have equity to attach to. What's the worst thing that could happen on a property? The very worst thing that could happen on the property. Well, God forbid I go to heaven early. Well, what does that day look like? Well, our investors are covered by actual equity in the property today. Not future equity that we're building, that's there too, but today they're covered by equity in the property today. That's a good thing. I sleep very well. 2, increased examination of complex and alternative investments. So we're looking at those regulators, and if the funds are locked up for 5 or 10 years, that increases the risk, as we know. But if you're an advisor and you have a siloed education, maybe economics is your degree, or law, or tax, you have a certain vertical in your education, then commercial real estate it's a different vertical topic in a vertical education. So that's why we're talking about some of these things where in some instances, it feels like, okay, this is very common, but if you don't have this kind of education, then all of the verbiage and the nomenclature is different. So we're talking about, a long lockup time on an investment that could take 5 or 10 years. That's a long time to an investor. Better 3 years. Again, we're going to roll through this pretty quickly. If you want a copy of these slides, happy to send it out. Just contact us at 817-409-8795, 817-409-8795, or reach out to champion@honorswaygroup.com, champion@honorswaygroup.com, and we'll get you a copy of these slides. We're happy to do that. We want to keep it to about 30 minutes in this presentation because we know you're taking your lunch. We know that your clients, they want to watch this seminar, are probably on their lunchtime because they're more and more focused on keeping their job, especially in this highly political environment that we're in. Actually, it's been very good for us. We had an excellent November, December, January, very, very strong, but we have a strong product. We have a great offering. We're giving a high return of up to 3 times in 3 years with collateral in the property. Nobody does that. So this is a great deal. So we have overcome by bringing an excellent product, giving a high return, and giving collateral. So let's talk about 3 real quick. Cybersecurity and regulation, SP enforcement. Those are incident response protocols, vendor oversight, customer notification capabilities. Those kind of things protect your client in any kind of investment, any kind of alternative investment. Not just the existence of controls or the non-existence of controls, but using those controls properly. And everything has a date and time stamp. We know that on the computer, that everywhere you go, you leave a footprint and there's a date and time stamp. So we know what's going on. That's what the SEC is wanting to see. Technology, AI, vendor oversight, risks. There are risks coming from AI tools. And for instance, ChatGPT, we don't use it. It's only about 60% accurate. And it puts your data all over the internet, like freeware. Your private, secure data is out on the internet with ChatGPT. So number 5 risk, increased oversight of newly registered firms. Examiners are looking for this. Compliance programs and conflict of interest management is another place where there could be a risk. Compliance programs and conflict of interest management is another place where there could be a risk. 6, liquidity, valuation, extended hours, trading risks. So we've got risks that come with valuation practices. That's why when you're looking at a commercial real estate valuation or appraisal, it needs to be an MAI appraisal. Get 2 appraisals and take the average to be safe. And make sure that your property is doing that as well. Other ways that you can provide a safe environment for your clients to invest in are on our website. We have over 200 YouTube videos. That's pretty amazing. We feel strongly about investors being safe in this environment. They have put some of them, they have put all of their nest egg into whatever. And it's a lot for them. It took them a lifetime to gain, as you know, as an advisor, as you know that. So if somebody has taken $1 million and put it into stocks, and stocks are very volatile right now, a lot of stock market money is coming into commercial real estate. So that's a great advantage for advisors to be helping as a fiduciary to help place the capital into a safe investment, but also there's a big risk. So what are the chances that they could rebuild that $1 million if they lost it? They lost half of it or whatever. God forbid they lose it all in the stock market. So we encourage people to come in to properties, and ours is the best. Class A luxury, right in the middle of the best market in the nation. Rents went up over 6% in Dallas overall in Class A luxury over the last year. And in our area, they went up 11%, which is almost double. So rent increases in Dallas and in our area, whereas across the nation, rents are flat, even in Class A luxury. So we have to watch that. So, take a look at that, honorsyoutube.com. for 200 plus videos, honorsyoutube.com. We have number 7, last on the list, cross-border fraud concerns. So the SEC is targeting these cross-border fraud incidents, and especially with Chinese issuers and their gatekeepers. So there is that risk that the SEC is watching out for, and we need to watch out for it too. So here's a short list of a checklist. Let's see. Okay, there's a risk checklist for RIAs and broker-dealers. And we're going to go through this very quickly. Fiduciary duty and best interest compliance. What can we do to hit that? Confirm investment recommendations to satisfy a Reg BI and fiduciary obligations. And here's the references as well. Review disclosures for all conflicts, including revenue sharing and affiliated products. So B, product risk and client alignment. Evaluate alternatives for private credit, private funds, leveraged options, ETFs for liquidity, cost, and volatility. C, cybersecurity and data protection. Audit vendor cybersecurity controls. Include cloud providers. D, technology and AI operational controls. We talked a little bit about this. The change management processes for key trading and compliance systems. Now, this is really important. Having been an engineer in the corporate world, we have change management, we have regression testing, where you have to watch out for a technical company to bring out new technology and new functionality. But did they regression test it enough where they didn't break something else? Negative testing, module testing, end-to-end testing. There's a lot of processes that need to be overseen so you can make sure that the company and the technology that they're using is concrete. E, compliance program strength. Are they compliant? Ensure policies incorporate to 2024 and 2026 rule changes, which were amended. F, we talked about cross-border and fraud prevention controls. Enhance gatekeeper controls, custody, due diligence, and reporting for international transactions. And on our properties, we have the report that comes from the contractor, and we have the report that comes from the owner's rep. So we don't have one person on the development site giving us a report. No, it's like 2 attorneys watching each other. It's great. Okay, short history of Honors Way. We've got 22 North, our property that was developed in 2018, and it was sold for a profit of $22 million in 2021. Same Class A luxury property that we are building in Dallas. And we leveraged the engineering, the architecture, the design. We leveraged it all and put it into the Prestige at Mayhill. We have our Prestige Build Fund, raised $8 million, and we have our Prestige Build Vertical Fund to go vertical. It's already raised 7 out of 10 million. So it's doing very well. All of the construction financing is approved and pre-approved with the different layers of the capital stack. So in a commercial instance, you have the capital stack that we're dealing with these properties. Again, some commercial real estate terminology. We have the private investors, the retail investors, the accredited investors, and then you may have some mezz financing or a bridge loan, and then you have the construction loan. So we have that capital stack that has to be filled out, and you have to understand where your ratios are so you don't overpay for money. A little more commercial real estate terminology. So these are actuals from our 22 North. We saw in the pandemic rent specials only one time when everybody else was having vacancies and rent moratorium and nobody had to pay for a year. Our tenants just paid, just like clockwork. This is what we want. We just want our tenants paying every month. No problem. The Prestige at Mayhill is in between counties. It's very conveniently located, centrally located. So our tenants can work in South Lake, Plano, or downtown Dallas. They can get on that light rail and go to downtown Dallas or Plano. They can go to 3 different job markets within 30 miles, and that's very convenient for a professional. Corinth Living Condos, okay, so we are working on this as well. The PPM is already ready for this and going through our due diligence firm with our attorney. We're working on the concept plan and working with the environmental study this morning. In fact, we worked on this. Very exciting. We're looking at least 60 units, half of them condos to infuse cash into the property, and half of them multifamily, but to a 55 plus active living community, and also sharing the amenity, mailroom, pool area, gym, and having its own private recreation area that it's part of the lot. We do have 23 acres. So there will be about 450 to 475 units on that property. Very, very excited. So yeah, Corinth Living Condos on its way, and gives us some fresh meat to work. So we're excited. Key highlights. We talked a little bit about this is mixed use, which I love. I love this product type, and your mixed use within one building. And if you're interested in more information, just call us at 817-409-8795 or champion@honorswaygroup.com. Prestige at Mayhill. So we have talked a little bit about this, but the risk mitigation is in place because we have it permitted and stamped. Everybody wants into this property. And we do have a couple slots. We're about to close this fund. We have raised 7 out of 10 million, and so we're about to close it. Not pushing as hard on it because the bridge loan and the construction loan are in place. We do have a couple spots for accredited only investors, and the minimum investment is 250. So if that meets your guidelines and your client's investment criteria, great. We're giving up to a 3 times return in 3 years. That's phenomenal. And over 200, we're giving a 10% increase in shares. So we're giving a great deal on a great property and a great market with a great team. And it's very easy to bring money to this project. So it's great for the advisor and the broker dealer to bring capital into their book. It's very easy for the advisor and the broker dealer to bring capital into their book. So reach out to us. Here's some of the numbers. A little bit small for a presentation, but the most important number in a commercial real estate transaction is the NOI, the net operating income. How much can this property bring in before EBITDA? How much can this property bring in before taxes, mortgage? That's the NOI, net operating income. So out of all of those numbers, that's the most important. But we have a couple other numbers that are important too. Let's look at debt coverage ratio. What is that? Okay, so let's look at that from a commercial real estate perspective. How to minimize risk is to know some of this. This is a ratio. This says that for every dollar we spend, there has to be $1.20 or $1.30 coming in from the bank. There has to be. That's the bank criteria. But this property is bringing in $1.40 in investment. So it is much less risky because it not only has the propensity to pay its own bills, it has crossed over that margin barrier, and it has a higher propensity to pay its own bills. And why is that important? Capital calls. It's a big risk when advisors are putting their clients into properties and that property has a capital call. Capital call is when the property is not paying its own bills. So look what happened a couple of years ago when interest rates were so low, 2%, and syndicators were just buying anything. It didn't matter what the numbers were. Who cares about any of that? Well, it got people in a lot of trouble because they brought bad properties, bad deals. It'll probably take you 50 properties in research to find a good deal, find a mediocre deal. It'll probably take you 100 properties to research and finding a stellar deal like this one. Okay, so the bank is saying $1.20, $1.30 is our minimum requirement of debt coverage ratio, and we're at 1.41%. It's a higher probability that the property will be able to pay its own bills and better, to avoid the capital call, to avoid the egg on your face, to avoid your client losing their nest egg. So advisors are having to deal with these knucklehead syndicators because they have very little experience. That's another risk factor for an advisor is you may see 10 co-GPs, co-general partners. Okay, that looks good. They may have 2 or 3 years of commercial experience or apartment experience. They have other experience, but they have 2 years, and all that combined experience does not equal a vertical career of knowing commercial real estate for 20 years or a team of 400 years of experience. So here's another area where we can watch out for is the experience of the team. And just stay away from those knuckle-headed syndicators that are just trying to close that loan for the fee. We put the investment right into the property. And so it immediately improves the equity stake and increases the value. That gives us $12 million of equity to attach to, and that minimizes risk. You can get rid of the knucklehead syndicator and protect your career, your family, your obligation as a fiduciary to your clients, and you can protect your fortune as well. So let's go to the lighter side of life. We've got some renderings from our amenity building. This is the leasing office, the club office, a little gathering spot for tenants looking out into the pool area and to the front door. We've got the leasing area, gorgeous renderings. We've got a collaboration area so that the tenants can come in and work together in a bright room. And here's the seating area as well. We also have a different profit center. So here we have an area where we are sharing profits from this profit center with our tenants. You're not going to see this in a Class C or a Class B apartment complex. This is more hotel-like, concierge-like. And this is our amenity profile is more concierge-like. Oh, you want to have your lettuce taken to your room and put in your refrigerator? Great, we can do that for you. We have a service for that. We have covered parking if you'd like to have that. We have electric vehicle chargers. We have pet rents. We have rent deposits, pet deposits. We have all different profit centers for the partners, your clients, that they can participate in that waterfall distribution schedule. Common area. So we've got our 30-somethings out there enjoying the beautiful Dallas sky. You'll notice that there's a lot of similarity to 22 North. We did that on purpose. And the design decisions we took from 22 North, and if there was a different decision to be made, I said, what did we do on 22 North? And it was done. So all of that was leveraged from 22 North. Our exercise room, our gym, excellent, 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 fun, 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 but also an influencer room where they can go in and they can pull down a screen, a backdrop, and they can do their influencer videos. A great place for partners to come and visit the property. The third floor of the amenity building is actually an investor's loft, and they can come and stay a couple nights a year with us and visit the property, fall in love with the property. Gorgeous detail. We're going to utilize some of this design in our Corinth Living Condos version of the other 1 or 2 buildings that we can get on the lot. 60 to 120 is what we're looking at, somewhere between there. And it's going to be a different taste, right? We've got the 22 North, which is 30-somethings. We've got the Prestige Living Condos, 30-somethings professional, and then 55 plus active living. Well, we have a different taste. We're not going to like some of that other pops of color. So we'll utilize some of these design aspects in our Corinth Living Condos. Hot sauna, cold plunge. Very, very exciting amenities to have in a Class A luxury. This is not a Class B or Class C, is it? It's concierge, it's cold plunge, hot sauna, Class A luxury. And then we have the mailboxes and mail slots for 400 units. We can also save money by sharing the amenity space with the 350 multifamily and the 60-ish, 60 to 120 condos in multifamily. We can share amenities and save money that way. I just think it's a beautiful asset. Why multifamily? I think we're going to skip through a couple of these slides because I want to honor your time that you're taking at lunch to review this information and send the link to your clients and help them to look through it. And if they want a copy of the deck, then we're happy to send it out. We also have a copy of, remember, we have this in PDF. We have 400 years of commercial real estate and a due diligence checklist. So what are some of the questions we should be asking? Are you an active investor or passive investor? Most of your clients are going to be passive investors. The advantages of passive investing through commercial multifamily. Case studies. How to choose an investment. What questions should I be asking? DL, have you ever declared bankruptcy? Wouldn't you want to know that? No, I have not. I cannot sign on these big loans if I had. DL, have you ever lost investors' money? No, not in 20 years. So we want people to be asking the hard questions and really keep your money and keep it in a safe place. Mistakes passive investors make, not understanding the deal structure, assuming the unknowns instead of verifying them, not vetting the operator, not seeing the deal through the eyes of the operator, unaware of the tax benefits of passive investors, which our investors will be getting depreciation expense shared, bonus depreciation. So if you have the problem of too high of an income, if your client has the problem of too high an income and they need some of that bonus depreciation to share, we'll have that in 2006 tax year. Very exciting. Okay, here's where our properties are, right by several golf clubs, a lot of nice shopping across the street, Whole Foods and Starbucks, very, very nice area. Okay, we talked about the numbers, and here is this seminar. We'll have another one in about 6 weeks. We haven't decided what the topic will be yet, but we will let you know and send you an email on that. And we invite you to partner with us. If you need to reach out, champion@honorswaygroup.com. I want to let you know some resources that we have. You don't have to always take the time to call the team. We have plenty of resources out there. One of the first ones is our website, where you can look at the amenities, look at the floor plans, look at the gallery. And we also have frequently asked questions, a new tab. Who are the principals behind their project? And what is their experience? Are the underwriting assumptions conservative? So it talks specifically about vacancy rate at the bank required level. Even though vacancy rates in Dallas have been 1 or 2 years, 1 or 2% over the last 15 years that I have been in Dallas, we put 7% vacancy. Okay, so go through these 11 common mistakes that passive investors make. We've got that on our website for you. We have updates on a regular basis about our project on Honors Way LinkedIn. A lot of updates, a lot of posts on here. We have our deal room where we have our deals, how much has been raised, what the deals are, which funds have closed successfully, which are open. We have a complete deal room on the vertical fund. We have information on all of the numbers that we went through, market information, sub-market information. I think we have about 40 due diligence documents here that you can get access to the deal room on. We have presence on X. We have a Facebook page where we post information as well. And then here finally is the honorsyoutube.com. Just type in honorsyoutube.com into your browser and it pull right up. We have over 200 videos where you can learn more about commercial real estate as an advisor. You may not have this in your skill set yet, but you want to be able to flex and learn about commercial real estate from the experts. And that's why we do this knowledge sharing. I'm a fiduciary just like you, and we want to share knowledge. Here are videos of us working and talking to registered advisors. And this was just recent, a couple months ago, I think, dinners that we've given for registered investment advisors as well. Our last wealth webinar, which asset class is half as risky as the stock market? So when you're putting together their portfolio and alternative investments, then you need to know that commercial real estate is half as risky as the stock market. So excellent. Yeah, taking the stamped plans to the city. It's very exciting. So I'm going to go ahead and we're going to stop sharing. So if you have any other questions, feel free to get back with us or the office. I don't have a ton of time because I am the lead developer and I only give about 3 afternoons a week to talking to individuals on investing and looking at their portfolio and if they are a good fit for us. We have about $3 million left to raise on Fund 3. Not a whole lot. You know, we've got that bridge in place and we've got that construction loan in place. So we're going to be closing that soon. But we are offering up to a 3 times return. And that's within 3 years with collateral of $12 billion of equity in the property. And we are excited to meet with you. You can get with our team. You can do your due diligence. Now, it takes about 2 weeks to do your due diligence. We understand that. We're not going to pressure you into a quick decision, but we do understand that it takes about 2 weeks to finish your due diligence. And then people are ready to walk through their ownership documents. So you can get registered. You can take a 15-minute discovery phone call with our staff. And if all of that is looking good, they'll put you on my schedule. We can get together on a Zoom face-to-face. We know all of our investors. We only have 80 investors, you know, in 15 million, because 75% of our investors have invested more than once. So 25% of our investors have invested twice, and another 50% of the investors have invested 3, 4, 5, 6, 7 times. So we don't have a ton of investors, but we have repeat investors, and that's great. They're happy, they're collateralized, and they're happy with the progress as well. So I just want to encourage you, if you are thinking about this, go through the process, 15-minute discovery call. If that works out, they'll put you on my calendar for probably a half-hour Zoom is what I can give you. And we can start you on your due diligence. We can get you into the deal room and you can do your due diligence. And we'll get back together in about 4, 5, 6 days, something like that. We're not going to pressure you into a decision. We're not going to pressure you into a certain number. You know your number. So we just want to help you to do your due diligence. After that, we'll have a second due diligence call. We'll continue the due diligence with me, the owner. And that'll be another 5, 6, 7 days, something like that. And then after that, if you're serious, you're probably ready to go ahead and invest with us. So that's our process. And we work with advisors the same way in helping clients to go ahead and get in. So if you're interested in up to 3 times return in 3 years with collateral on the property, then get back with us, Honor's Way, and we can share what we're doing. And we ask that the Lord richly bless us through this week and bless your family and your work and your friends. And we hope to be talking with you soon. Thank you for taking the time as an advisor. We know that there are a lot of pressures on you. And, if you have a good product, man, it makes it so much easier to pull capital to. The good product sells itself. And we want to be that help. Thank you for joining us. And we will talk to you soon.
It's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount, not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. The Prestige, your partner in commercial real estate investing.